Hi, it's John, that franchise guy, thatfranchiseguy.com. Thanks for tuning in to learn a little bit today about the current state of funding. I know things can fluctuate, so for record keeping, today is December 19th, 2023. And I have with me Jonathon Kollra from First Financial. I'll let you introduce yourself, but I know you guys are, if not the top, one of the top SBA originators in the country, and I thought this would be a perfect time to put something out there for people to learn a little bit about how easy it is to get
Yeah.
funding for a business startup in franchising, and um, squelch some of the rumors that I'm reading in the big news out there about credit
Yeah.
crunch, because I haven't seen it. So
No,
anyway,
me neither.
please introduce yourself, Jonathan.
Yeah, thanks, John. I appreciate that. Yeah, so my name is Jonathon Kollra with First Financial. I would consider us experts in the SBA space. My personal background, I got a master's degree in finance and spent most of my life in the investment management world at various places, managing a few different of the brokerage offices, etc. And found myself in a unique situation that I wanted to finally start running my own business and kind of taking care of my own situation, right, instead of making money for other people. And finally made the decision after 20 plus years in corporate America to start my own business. Got ready to pull the trigger and COVID happened. So First Financial had secured financing for me to start the business. So I said, what better spot than to help other people with their dreams, as in the role that I was going to, the business I was going to start was not going to be a one that would have excelled during COVID. So John, there is a lot of rumors out there. Back in the day, it would take a significant long amount of time to get an SBA loan from start to finish. I know we're going to talk more about the program, but we are getting loans done in 30 days, um, and a lot sooner than that as well.
Have you seen any changes? I mean, I guess good or bad. I mean, if you read the news, you think, oh my gosh, people aren't getting loans anymore.
Yeah.
Um, but have you really seen any changes in the last, 6 to 12 months on the business lending side?
Yeah, absolutely. Absolutely. Obviously we're at 23-year highs on the interest rate. So that's always been kind of, something that might hold a few folks back. Um, but in on beginning of August, roughly, banks started making some changes to their SBA lending programs, whether it would be hiring additional folks to help them with capacity, to automation, things of that nature. But the requirements to get an SBA loan, especially in different tranches, they've reduced a lot of what is required in order to do so. So again, with the speed of getting loans across the finish line to the
Mhm.
requirements in order to qualify from an SBA standpoint. There's been a lot of positives in that space. We're seeing a lot of franchises that are newer, meaning they've got less than 50 locations. So from a negative standpoint, it might be a little bit more difficult, to get those loans moved through quicker. But for the most part, we can still get them done,
Mhm.
if you will. But yeah, I would say the only negative has been the interest rates, right? And from a borrowing standpoint, that's across the board. So the
You know,
Fed has raised rates. I believe it was 12 out of the last 14 times they met.
right.
But we got positive news last week that they anticipate, as we head into an election year, that they're going to
Mhm.
reduce rates 3 times at least next year. So let's hope that we hold them accountable
Yeah.
to that.
Well, I think that it's while there can be a little bit of a shock value just to the number, right? While we're talking about what prime plus 2 3/4 typically.
That's
So
correct.
we're what, 9 or 10%. Um, to somebody maybe who's new to business financing, that can seem like a little bit of a shocker. I know I told you before, I started in the 90s, the early 90s, as a residential mortgage loan originator, and we were doing 12 and 13% fixed rate mortgages back then.
Wow.
So to me, it's
Wow.
not a shocker, but certainly to some of the younger folks, and having lived, like you said, through the last 23 years of much lower rates. But the bottom line is, in a business funding situation, you're creating a business plan, including your projections, your pro forma. What does this look like? And if you're looking at a business that $200 or $300 a month in a payment is going to make or break you, you're probably looking at the wrong business to start with. So, I mean, we're not talking about 25% interest rates. We're talking about 9 or 10% that will probably be, 6 or 7% again within a couple of years. That's my opinion, by the way.
Yeah.
I'm the franchise guy, so I don't want to hijack it from Jonathan, the funding guy.
No,
But
not at all. Yeah, and I think if you and I had a crystal ball, we'd probably be doing something else. We'd
right.
probably be in Vegas right now. But yeah, no, with respect to that, the monthly payment is what makes the most sense to your
Mhm.
point. You're looking to be able to pay that loan back. But one of the benefits of an SBA loan is there's no prepayment penalty.
Mhm.
So you in essence control the interest rate, by how much you're putting towards that loan. But to your story of in the 90s, I got in the investment management world. I graduated from the University of Miami in 96, and I went to work in the investment world right away. And I think um, we could get you in if you came into the office. The rack rate on a money market was 1.5%. But if we really liked you, we could get you in at 4.5% and not have to answer to anybody about it.
Yeah.
And I remember I was married to my wife for a few years. We're going on 20 this February. The first couple of years of our marriage, interest rates were at all-time highs for us. And we were making money just putting money in the money market account. And once the rate started to come back down, one day she pulled me aside and said, are you not good at what you do anymore? And I said, what do you mean? And she said, we're not making any money. And so I love my wife to death, but I had to have the interest rate discussion with her, which was really painful. So I'm right there with you, John. So not quite the 12 and 13%,
Right.
situation, but
Well,
yeah, this is definitely something different.
before we get into some of the details of what I think is probably your most popular program, and certainly I think will fit a lot of the people that I work with, I would like to talk about, your background is really ideal for somebody who is looking at starting their first business, because there's a financial element to it that brings fear and unknown, and certainly there is risk to it. But I think being able to talk to people intelligently about their finances, not just from, hey, I'm here to get you funded, but hopefully to educate them on how this fits into the world of building wealth and equity, and hopefully someday, a retirement portfolio that your business helped generate. But along those lines, what do you recommend in terms of how soon does it make sense for somebody who's thinking about starting a business to maybe sidebar from my conversations about franchises, and talk to you about how much can they really afford?
Yeah, that's a great question. Um, I would say as soon as possible. There's no negative to getting
Mhm.
pre-qualified for a loan, so you know how much is going to be available. Number one, there's no financial commitment. Client doesn't have to pay us to get pre-qualified. Um, their only investment is going to be time to get some of the documents, and as we'll talk about what those requirements are, you'll realize pretty quickly that they're not significant.
Yeah.
We don't hard pull somebody's credit, so they don't have to risk that their credit score is going to get affected. But I think as soon as they get that pre-qualification, they can have a more ground level discussion with you as to
Mhm.
what will fit them, moving forward. Oftentimes in this business, you'll see one of two categories of people. One, they're so excited that they're just going to do everything, right? They want the car, with the navigation, with the heated and warming seats, they want
Yeah.
everything. And then you'll get the other individual that is like, listen, I'm not sure that this is going to be successful. I want to spend as little as possible. And I think that the art honestly comes into figuring out what is the best fit for that client, as cliche as it sounds, which is going to be somewhere in the middle of those two
Yeah.
extremes. Um, One of the things that I pride myself on is, if I can get my mom and dad to understand what I'm talking about, or my wife to understand what I'm talking about, all three of them are very, very successful in their own areas. But when it comes to issues of investing or, from a lending standpoint, um, they can get overwhelmed pretty quickly. And so what I
Right.
try to do with every client is break it down, something that can seem overly difficult, and put it into layman's terms. You know, one of the books I read years ago had something in there that says, "Does grandma get it?" Right. And so if our grandparents can understand what we're saying, I think it helps the clients to understand. Because admittedly, it's a stressful situation. I went through it. You know,
Yeah.
it's very nerve-wracking. Most of the folks that we deal with have never owned a business. You know, they're used to making money for other people. And when you make that jump to start making money for yourself, you know, you got to realize, you know, what kind of safety net do you feel comfortable with? You know, and I think
Yeah.
that, you know, from your and I's conversation and the clients that we've worked with in the past, I think that it meshes very well for those clients to get pre-approved as quick as possible. Um, so that, if from a vehicle standpoint, you're not going to look for the Lamborghini, if the Chevy Tahoe is what's going to be the best for you from a long-term
Right.
perspective or from a short-term perspective, and then graduate to the Lamborghini,
Absolutely.
in that spot.
No, I think that fitting it to the client's needs is the absolute perfect approach. I mean, obviously, I'm taking the same in terms of franchises that will connect them with. But from a financial perspective, I think that's important too. I mean, it's um, one of the reasons that, or primary reasons for those few that do fail, is because they're underfunded. Whether it's because they didn't get a big enough loan or they tried to do it a different way. So I always, whether they tell you John said this or not, I always encourage them to get as much as they can,
Absolutely.
because there's no early payment penalties or prepayment
Absolutely.
penalties. If you're cash flowing hard at 6 months or 12 months and you want to start paying chunks of it off, do that. But
Yep.
then you don't need it. It's not so.
Absolutely.
Um, so I think it's a perfect time to transition into, again, what I think is probably the best program for a lot of the people I work with. um, I know it's not necessarily an industry term, but we refer to it as the express loan. Goes up to
Yep.
150,000, I think, right? So let me
That's great.
let you, the professional, talk a little bit about that program and what kind of things it's great for people to use for funding.
Sure, absolutely. And folks who watch this video, if they have a conversation with me in the future, they're going to probably hear some of the same things. So I
Perfect.
apologize if they're going to hear it twice, three times. But I think it makes the most sense. So as
Mhm.
somebody who was going to start a business, I think it makes sense a little bit to tell you how the sausage is made.
Yes,
Um,
please.
in that space and the why behind some of these things. The reason that lenders love doing SBA loans is because if the lenders follow the government's what they call standard operating procedures or SOPs, if the lending institutions follow those requirements, the government guarantees anywhere from 75 to 85% of the loan, right? So the banks are only on the hook in any given situation from 15 to 25% of the loan. Now, admittedly, what does that mean to me as a consumer? Well, frankly, the reason that I tell everybody this is because of that guarantee, the banks are not required to take your house as collateral on any SBA loans up to 500,000. Now, that doesn't mean that they can't put a lien on property, but for the most part, they're not required to. I will share with you that all of the loans that you and I are going to talk about in the Express Loan program do not require collateral. So the client is not required at the $150,000 level to put up their house or their, any kind of rental properties that they own as collateral, which to me is a huge relief that I don't have to risk, losing my home if something happens and the business doesn't do, what we expect it to. The other benefit of an SBA loan is it does not require, um, it's not going to show up on a client's personal credit report. All right. There is minimum
Mhm.
credit score that you have to meet, and we'll talk about that in a second to get approved for the loan. But the loan is going to be to their business entity, to the LLC or C corp that they set up. So it will not appear on their personal credit. Now they do personally guarantee it, but it will not affect their ability to secure funding, in the future. With respect to the SBA Express Loan Program, um, and I may have told you this before, John. I think it's the easiest loan that you could possibly get, and here's why. The requirements are very minimal: 700 credit score or better. The bank will go down to 685. I like to tell clients shoot for 700, because if you're coming in at 685 and it winds up, coming in a little bit lower after we've submitted for approval, we might have some work to do to get it back up. So I say, 700 credit score is the benchmark, and you're only responsible for 10% down. So on this loan, your maximum out-of-pocket expenses from a down payment standpoint are 10%. Loans 150, you are only responsible for 150,000 out of pocket. John, you and I were talking earlier. The bank used to want to see that you were sitting on 25 or 50,000 in addition to that, is what they refer to as post-loan liquidity.
Okay.
August 1 of this year, the bank removed that. So there is no more requirement that you're sitting on 25 or 50, because what the bank realized was they were boxing out some of our younger folks that are just getting started, that may have not been able to amass, that level of wealth. So literally the requirements are 700 credit score, 10% down. The bank does want to make sure you're able to pay your current debt obligations, because they don't want to risk that this loan will be used to pay your mortgage. With respect to that, the documentation requirements.
Jonathan, can I jump in real quick and just to
Absolutely.
clarify for people who are watching and really don't know much about, and maybe they've done a home loan, and so when we talk about down payment or your equity injection, you'll hear more sometimes used, right?
Absolutely.
We're looking at your total startup pack. So we'll sit down, the client and I, and then ultimately you as well, and create projections for what a specific franchise is going to look like. Look, what is this startup going to take? And then it'll be 10% of that. And that's everything, right? I mean, that's, if there's brick and mortar, that's your construction costs, your equipment. If there's a car or vehicle involved, it's that, all your marketing budget and cash reserves included in that. So it's important, I think, for people who are maybe really, really new to the idea of this. Maybe you follow me on LinkedIn and just happen to watch this video. When we're talking about down payment, it's 10% of that total project, and we help walk you through all that. So documentation.
Absolutely. Yeah. So real quick, John, to that point, our fee is minimal, but a majority of that down payment is satisfied by them paying a down payment on the franchise fee. So it's not a down payment in addition to what they'd be spending towards the franchise fee, but the bank pays most of the franchise fee in most cases, in that situation. So yeah,
so you're looking at like 165 to 170,000 is probably your, like, if you're looking at the minimal amount down, if you will.
Correct. Yeah.
What you'd be looking at in terms of your total project. So for those of you watching, there are a tremendous number of opportunities out there, especially in the service sector, where you can get started for under 150 grand. So coming in with 15, 17 of your money and getting a loan for 150 is very, very doable for some very attractive businesses. So
yeah, absolutely. And John, to your initial point earlier, about making sure that the client comes in not undercapitalized. We want to make sure the client has about 6 months of working capital, monthly expenses to cover, what it's going to be from a marketing and advertising standpoint, for payroll, if they're going to take a salary, things of that nature. We want to make sure, a lot of times the FDDs from a franchise will account for 3 months, but we want to make sure that we've accounted for at least 6 months, because to your point, the reason that businesses fail is because most often they're undercapitalized. But back to the fun things, the paperwork.
Right.
So August 1st, so prior to August 1, we used to need 3 years of tax returns for the 150 loan. Now I only need 1 year. I only need last year's tax returns. I used to need 3 years of 3 months of bank statements rather. Now I only need 1. I used to need a full business plan. Now I do not. We use the FDD from the franchise to satisfy the business plan requirements. I used to need a resume. I don't need a resume anymore. So the documentations have come down in terms of the amount of things that we need to get a client pre-qualified and started on this process. There's a personal financial statement, which is a couple page document where you list your assets and liabilities.
Mhm.
It's a PDF fillable form. I need driver's licenses of anybody that's going to be on the loan. I need, like I said, I need the last year's tax returns. I will need the last month's bank and brokerage statements. And then we want to see the credit report. So we do not hard pull the credit at this point. So we will send instructions on the pre-qual documentation, instructions on how the client can pull their own credit, so that we can get there. If there's a
That,
situation where the client doesn't meet that credit score of 700, we've got somebody that we refer to that is amazing. I don't get compensated for the referral, and I've used him personally. A lot of times these credit gurus, if you will, charge a monthly fee,
yeah.
and then they slow play actually helping clients. Gentleman we use, his name is Shane. He's amazing. He does not charge a monthly fee, and knows the requirements in order to get somebody funded for an SBA loan. So but that's really it. I mean, if you sent me over a candidate that's worked with you,
Mhm.
and I have the initial conversation, typically takes anywhere from 15 to 25 minutes, depending. By the time I get their documents back, I can get them pre-qualified in a few hours. So
Wow.
they get a letter saying they've been pre-qualified for the $150,000 express loan. They're off and running with you to find what's the franchise that meets that opportunity. And then from there, we're having them set up their LLC and things like that. But
Yeah.
what I will tell you is the art of what I do is I am with the client from start to finish. So as soon as you introduce me to somebody, I am with them, holding their hand, walking them through, helping them build the projections, getting all the necessary items to get them from processing to underwriting to closing, and then
Yeah.
ultimately to funding.
That's awesome. And I didn't even know about the documentation thing. I mean, I've got an SBA loan for one of our businesses, and I definitely had to do the 3-year thing. It was not
Yeah.
not easy, all the paperwork that was required then.
Yeah, it's a
Um,
little bit more. We need the 3 years if the loan is going to be over 150.
yeah,
But for the express loan, that's why I mentioned the express loan is probably the easiest
yeah.
$150,000 a person can get.
Well,
Um,
I'm glad you mentioned that too, because I did want to, before we wrap up, make sure that people watching this know that's not all you do. I mean, there's
yeah,
a number of things from the bigger loans up to the 500 you mentioned.
yeah,
I know that there's SBA backed loans up to like 20 million if there's real estate involved, right? Or
yeah,
maybe that's not the right number,
yeah,
but
yeah,
I
no,
know
no,
it's a big number.
yeah. Yeah, so the regular loans that we do are what they call the 7A loans.
Yeah.
And those are good up to 5 million.
Yeah.
If you're buying a building, we can amortize it. So let me take one quick step back. So all SBA loans are 10 years. So the ones that we do are all 10-year term. So you're not locking your money up for 20, 30 years like the mortgages you and I were talking about
Yeah.
earlier. Um, in that space. You can amortize the loan up to 20, 25 years if you're buying a building. But there's typically a $5 million cap. And yeah,
Okay.
we do loans anywhere from 150 up to 5 million.
Per-
Home
Perfect.
based businesses to, bounce houses to walk-in medical
Yeah.
clinics, you name it. We've probably done loans for about 4,000 different franchises.
That's awesome.
The
Well, and
company
thanks
is.
for correcting me there, because I just pulled that number out of my
Yeah,
memory
yeah,
from
no
somewhere.
worries.
But
But the 20, it's typically 20 to 25 years. And there's
yeah,
other type of loans that we would help clients with, USDA loans. But our specialty, our core competency, I would say, is the SBA
yeah.
space. Uh,
Well, and I know that's primarily where we work together, and I think where you bring a lot of value is to that person who's really unsure of. I mean, this is new to them. They don't
yeah,
know what they're doing, and they're looking for guidance. And I know enough to be dangerous. Clearly, hopefully, I asked a couple intelligent questions here today,
without a doubt.
but I'm not the finance guy. And
No,
so it's good to have a team that works together that I can confidently say, talk to Jonathan, he'll give it to you straight, and then we'll know where we can take this for you. And so um, that's my personal approach, especially with that residential mortgage background. As I know how valuable it is to know you're confident in your funding before you go shopping. So
Absolutely. No,
yeah.
without a doubt. And I would say, that's where our core competency is. We'll get a lot of clients to say, "Hey, what do you know about this franchise? What do you know about that
Mhm.
franchise?" And that's where your expertise comes
That's right.
into. You've done the due diligence for them as to what's going to fit their lifestyle, their needs. What do they have expertise in? What's their passion? My job is to find out, will they qualify for the loan?
Ab-
In that
Absolutely.
space. And I think that that's where, where we go hand in hand. When
Yeah.
I decide to dip my toe back in, and to start a business, which at some point I will do. You're the first one I'm calling. I'm not going to try to operate on myself by any stretch of the imagination. Even somebody who's gone through it once. But
Yeah.
ideally, right? Everybody would love the client that calls you and says, "Hey, John, I want your help. I want this
Right.
franchise. I've got this amount of money and I'm ready to go." But realistically, that's not going to happen. And so it's one of those things. The other thing I'll share with you is, I'm a consumer myself.
Yeah.
So I'm not one of those people that beats down your door to say, "Hey, listen, I haven't heard from you." Much to, other coaches and folks. And, sometimes you'll call me and say, "Hey, Jonathan, what's going on with Joe Smith?" Um, and admittedly, I have to go double check because I follow up, don't get me wrong. So one of the things, that I pride myself is, if I tell a client I'm going to call them at this day, at this time, that I absolutely do so. But I'm absolutely respectful of, everybody's time because I'm
Yeah.
a consumer and I hate when you walk into a store and you get 7 or 8 people coming and attacking you. But I also hate when you walk into a store and
And
nobody
nobody's
looks in your direction. I want the best of both worlds,
well,
So
I think
that's my
you and I operate very similarly. I often tell people, especially on an initial conversation, uh, particularly if they've had bad experience maybe with someone else, I'm like the least salesy business or franchise broker or consultant you're going to work with, and I've probably left money on the table for that. But I feel like it's a two-way street. I rely on my candidates to be engaged and respectful of my time as well, and for people that are operating that way, um, you don't have to push them along. I don't need to be in their face. I don't want to. If I'm having to sell somebody on a franchise, we got big problems down the road, and
absolutely.
and so I think that I appreciate that approach. So, with that in mind, I'll let you have the last word if you've got one on funding, but definitely give us how do they get a hold of you, and I'll put that on the YouTube listing too, so there'll be that information there too.
Perfect. Perfect. Yeah. So, what I would say is, if one of the reasons that you're not engaging in trying to find a business is because you're worried about the financing part or you're worried that it's too confusing, um, number one, that there's one line that I use all the time. There's no stupid questions. The only dumb question is the one that isn't asked. I tell my kids that all the time. Um, I didn't know a lot of this, in all honesty. And I had spent 25 years on the investment management space. You think I would have known some of it on the lending side, but I didn't. And the reason I came to First Financial was because they guided me through every step of the process. So I felt comfortable enough. I mean, I was nervous enough to start my own business. Um, I kind of made the joke, God had other plans with COVID. I don't think COVID was created to stop me from owning my business, but it wasn't the right time. In that space. And so what I would say is, there isn't any risk other than your time to at least have a conversation in that spot. The other thing I'll share with you is my CEO told me a line years ago. Um, he worked at a big bank, and he said that his boss had told him, "Break my heart on the first date, not our first anniversary," which has always stuck true to me because I tell it straight. Some
Yeah.
people love it. Some people I might take a little bit getting used to. But I don't want somebody to think that they're going to get approved for X, Y, and Z if that's not in the cards.
Yeah.
I want to be, respectful and honest. But I'd rather the client have that information ahead of the game. That being said, there are very few folks that we can't help with the 150 loans. So if it's a home-based business, great. To your initial point, we can absolutely discuss if you're looking at a bigger franchise, if you're looking to do something a little bit, that requires more build out and things like that, I can help you with that as well. We can kind of share it as a one-off when we have the conversation.
Sure.
But to be respectful of everybody's time, obviously you and I didn't kind of dive into, maybe we can save it, for a later date. But what I would say is, don't be afraid to kind of ask the question. It probably, and I'm not the type of person,
Yeah.
I kind of joked with you. I will never give you an answer I don't know 100%. So I say a lot. I
Perfect.
say I don't know a lot of times in every aspect of my life,
Right.
especially but I'll let you put my contact information. But my
Okay.
phone number is 954-603-5524. And it's Jonathan.Kollra at ffcash.com, which is JONATHON.KOLLRA at FF. So Frank cash, like cash money, .com. So Jonathan.Kollra at ffcash.com.
Perfect. Awesome. I appreciate it. And obviously you guys know you can find me at ThatFranchiseGuy.com. I do have a funding tab there. I believe First Financial's up there. If not, I'll make sure that that we get that updated as we roll into the new year. So Jonathan's contact information will actually be on my website as well. Thank you everybody who took the time to watch this. We went about 30 minutes, which was a little longer than we hoped, but I think it was really, really valuable information to share. And thank you, Jonathan, for joining me and all of the insights. Definitely appreciate it. Happy holidays, Merry Christmas, have a new year, Happy New Year. And 2024 is gonna be a great year for all of us. I can see it coming already. So
Yes,
thanks
sir.
again, everybody,
Yes, sir.
and Happy New Year.
Thank you.